Hi everyone, welcome back to the Clara CFO Group channel. What is accrued interest? What is accrued interest? You've probably heard that a lot of places, and especially if you have gotten any of the stimulus loans over the past year, you might be wondering, well, what does that really mean at the end of the day? So that is what this video is about. I hope it's helpful to you. This is also applicable. We're going to talk about this in the context of PPP and EIDL loans. However, this is applicable really for any type of loan that you get into. The first time I heard the term accrued interest was when talking about student loans. Okay, so this video might be broadly helpful to both business owners talking about these specific stimulus loans, but really any interest, any type of loan that has accrued interest. All right, so I hope this is helpful to you. If it is, please go ahead and click the thumbs up button on this video. Click the like button. It would certainly help me out, and make sure you're also subscribed to the channel. All right, well, what is accrued interest? Okay, interest is charged on any type of loan that has an interest rate, which is pretty much any loan. If it doesn't have an interest rate, it's probably not a general loan that you would have out at the bank, or maybe you have a 0% interest rate for a certain amount of time. That's great. But most loans have interest charged on them. So when you have interest on a loan, you are getting charged based on the principal. So let's say your loan amount is $10,000. And then an interest rate is charged on that loan, okay? And when it accrues and you're not paying on the loan, that means it's accumulating. So the word accrue, just think of it as the word accumulate, okay? So if you are not paying on the loan, and this is the case for the PPP and the EIDL loans, when you first get the money, the loans start accruing or accumulating interest from day one. Okay, day one, they are charging, the SBA is charging you interest. Okay, so that has been a little bit confusing people because they didn't necessarily know. They thought maybe interest only starts once they start paying back a loan, but that's not the case. Both of these programs, even though you don't have to pay on them right away, you are accruing interest. So I'm gonna pull up my calculator, which is available for download if you want it. I'll put that link in the description box below, but we are going to show you the calculator that shows you what that actually looks like. So when you have an interest rate charged, it essentially adds it on to the principal or the amount that you have to repay. So you're building and building and building and building. So that's the downside. Like this happens with certain student loans where you think you might, sign up for a student loan. You didn't realize, oh, interest was actually accruing those 4 or 5 years I was actually in college. Oh, so my $20,000 student loans have all of a sudden become a $40,000 student loan just because of the interest that continues to accumulate when you're not making any payments. So this is a very, very key factor. And one of the reasons that I bring this up today is because I was on a call with somebody asking about their EIDL loan, and they didn't realize that their loan was accumulating interest, but they didn't really actually need the loan. They were considering repaying it. So once we discussed this concept, this client said, hey, I don't want to hold on to this money because I'm essentially being charged for money that I don't need. So I'm going to go ahead and pay it back. All right, so that's why we're talking about this concept today, and I want to show you guys exactly what that means and exactly what that can look like with your specific numbers. And before anybody gets too concerned, just remember with PPP, the interest rate is accruing on PPP, but when you get that loan forgiven, the SBA will also forgive any accrued interest. Okay, I'm actually seeing that being broken out on the statements when the SBA notifies the bank and then the bank notifies you. It says, forgiven PPP loan is X amount, and then interest that's also forgiven is X amount. Okay, so you don't need to worry if you're accruing interest and then the PPP loan is forgiven. You might think, oh no, I've got that little extra interest portion that I'm going to have to pay back. But that's not the case, okay? Even if your PPP loan is not 100% forgiven, let's say there's 10% that is left over, then you'll only have the obligation of the interest on whatever is not forgiven, if that makes sense, okay? So the SBA will forgive any part of the forgivable loan, the interest associated with whatever is actually forgiven. Well, let's go ahead and dive into a screen share where I'm going to show you what accrued interest can look like on an EIDL loan. All right, here we are in that EIDL amortization schedule, and this is the one that I said was available for download in the description box. It is totally free. It's available to you. You can plug in your own numbers in this spreadsheet. And then I have another video on that as well. I'll try to link that in the description box below as well. But what I want to walk you through is showing you what it really means when we're talking about accrued interest. And again, accumulated interest. So once you plug in all of your numbers up here, the principal amount is always going to be the amount of a loan that was actually given to you. So that's kind of the face value of the loan. It is, in this example, EIDL, if you got an EIDL loan, the $20,000 was the amount that was deposited into your bank account. Okay, this is that principal amount. That's a term we use in loan lingo. And then the term of the year is usually both sometimes described in years and in months. So it's 30 years and 360 months. And then your interest rate in this loan in particular is a 3.75% annual interest rate. But for this loan, it's actually compounded on a daily basis. Okay, so that can affect the interest rate a good bit. And then we have the payment start date and the interest start date have been listed here. But what I want to show you is this table, because this essentially helps us calculate what is the actual interest that is being built up over time. Okay, so what we're looking at here is the balance of the loan starts at $20,000, and then the 1 month's interest was $61.64. So what we do is we add this interest to the balance, and then that becomes the new balance. You'll see like this new balance is essentially the column E plus column F is the new balance, and then that new balance gets transferred down to the next month, carried forward, and then the next month's interest is charged on that. So the way that I have this interest calculation is based on a daily rate. So you'll see it kind of fluctuate, mostly trending upwards. But if you're in a situation where a month only has 28 days, like February, then it could, the amount will look a little bit lower. For example, $59 of interest was charged for February, for example. So when January has 31 days, it had a higher amount of interest. So that's why you'll see that in the calculator. But essentially, so we can look and we can see, okay, basically this business is having to carry and pay $60 to $65 just to carry this money, whether or not they're using it or not. And with EIDL, the payments were originally deferred for 1 year, and now they're deferred for a full 2 years. So this amount just keeps on growing. So you'll see at the end of those 2 years, you will see that a $20,000 loan has become a $21,486 loan. Okay, so now then payments start kicking in after that, and that's when the amounts will start to go down. But I just want this to be really clear to you guys, especially for those of you who got $100,000 loans, $200,000 loans, $300,000 loans. This interest can be very, very significant. So you have to make the determination, does it make sense for you to be accruing this money at this point in time? Or maybe you want to go ahead and start repayment even before you have to, because you're essentially just, basically getting charged for holding on to this money if you haven't used it. But you get charged when whether you are using the money or you aren't using the money, whether you're repaying or you're not repaying, you're still accruing interest. It is accumulating, okay? So I just wanted to make sure that was really clear for you guys. Over here on the side, this shows how much is accumulated in year 1 and how much was accumulated in year 2. All right, so I hope that makes accrued interest super clear and easy to understand. Okay, you guys, well, I hope that was helpful to you. Use this information to help you make a better decision for your business, okay? If you think, hey, doesn't make sense for me to hold on to this money because I don't need it and I don't want to have to repay all of that extra funds just within accrued interest, then you can consider paying that back. I do have a video specifically on repaying your EIDL loan, so I will link that in the cards above, so you can check that out. I hope that's helpful, you guys. Talk to you soon. Bye.